Good morning. I'm Dr. Raju V. Now I'm going to focus on the concept source of rural finance. The rapid increase in the banking sector, particularly after the Green Revolution, the rural sector had a positive impact on farming and non-farming output, employment and income. Here, the first and foremost source of rural finance is cooperative societies. This source of credit is the most economical and important source of rural credit. It was set up with the aim of facilitating the complete credit needs for small and medium farmers. Cooperative credit societies progressed steadily after a few years for inception. And another source of rural finance is that Land Development Bank or LDBs. This source of credit is also known as a land mortgage. It essentially gives farmers a long-term loan option upon the mortgage of their land at low interest rate over a period of 15 to 20 years. These type of loans are usually taken if the farmers have some land developments work or digging of wells, etc. If extra land is to be taken through out and out purchase, or if previous dues are to be repaid. Third important source of rural finance is that commercial banks. Earlier, these banks were only received deposits from the urban population and issued loans only for trade and industry. They generally neglected agriculture and the rural sector because by nature agriculture is a high risk venture. However, in modern times, even commercial banks, they have been providing both the direct and indirect investment to agriculture sector. And another important source of rural finance is regional rural banks or RRBs. Government initiated regional rural bank because of which RRBs have been set up to examine the specific needs of landless workers, small and marginal farmers, rural poor and artisans. Okay, and next is that the government. The government provides short and long-term goals, to farmers if there is an emergency like a famine and a flood. Okay, I mean here the government is going to provide long-term loans actually. Okay, these type of loans are known as Takavi loans. Okay, what and all the government is going to provide loans have been called Takavi loans. Okay, and role of rural banking. Here, role of rural banking has been simplified over here. First of all, which will create credit facilities to farmers. Okay, farmers they might require finance for the rapid expansion of banking system. Okay, which is going to benefit rural areas by providing services and credit facilities. I mean, here, you know rural banking is going to benefit farmers by expanding financial services and credit facilities. Next is that eliminating money lenders. There is a problem of local or indigenous bankers. Okay, here expansion of rural banking among rural sector really is going to lessen the problem of local money lenders. As we know, local money lenders they are going to impose a high rate of interest, which will be prevented, and control on finance. Rural banking, among rural sector, it really is going to benefit farmers and agrarians, ruralities, because here government is going to maintain buffer stock after green revolution to control famines. Okay, so really it's going to help the people those are living among rural areas. Okay, and again we'll have to focus on source of agricultural credit. Okay, there are two source of agricultural credit. One is institutional source and there is non-institutional source. Under institutional source, financial institutions, those are established by the government, okay, which has been called formal source of credit. Here aim is to provide credit at a cheap rate of interest. And on the other hand, non-institutional source means traditional source of credit, or this has also been called informal source of credit. But here only demerit is they are going to charge a high rate of interest. Okay, examples of non-institutional source of credit is local money lenders, landlords, okay, and other indigenous bankers. Okay, like that. An institutional source of credit. This chart gives a simple explanation of institutional source of credit to the farmers. First of all, commercial banks. As we know, commercial banks are going to provide a loan for all agriculture purposes. Okay, which can be, short, medium, and long term as well. RRBs are regional rural banks. They're opened up where there are, no banking facility at all. RRBs are aimed at, providing credit to small farmers. Okay. Again, third source of institutional source of rural finance is cooperative credit societies. These are aimed at, to ensure timely and rapid flow of credit to the farmers. And cooperative credit societies, they charge, a low rate of interest, of course. And SHGs, self-help groups, credit is given from money collected by each member. And again, they're going to charge, a low rate of interest. Okay, like that it goes. And one more thing we have to see, that is a non-institutional source of credit. Non-institutional source of credit, wherein, sources could be, money lenders, rich landlords, traders and commission agents, relatives and friends. Okay, all these four are, a few more important, source of, revenue under non-institutional source of, credit. Thank you.